Welcome to the Zions Bank Economic Update. I'm Deb Speed, and joining me is Robert Spendlove to discuss whether or not the Fed will raise rates at their upcoming September meeting. Robert, following the release of the August employment situation, the general consensus seemed to be that the Fed would not raise rates this month. However, last week, in response to some rumors that maybe that's not true, the markets seemed to have a quite significant reaction. Before we get into why maybe the market reacted that way and why the conversation changed, I want to understand what the economic indicators were that would suggest the Fed would not raise their rates this month.
Thanks, Deb. There's several different economic indicators that we've been watching really closely. One of them is the employment situation. So in August, we expected the nation's job market to grow by about 175,000 jobs. It only grew by 151,000, so below the expectation and below the consensus forecast. We also saw unemployment rate come in not where we were expecting. Wages were below our expectation, and the labor force participation rate continues to be below where we'd like it to be. On the manufacturing side, we're seeing contraction in the manufacturing sector. Our GDP should be around 2% growth, and we're only seeing about 1.1%. In fact, the consumer is entirely holding up GDP right now, and the business sector is not seeing the kind of growth, is not giving the kind of addition to GDP that we'd like to see. And then the last one is inflation, where inflation is about half of what the Fed would like to see to justify normalizing of interest rates.
So that seems like a lot of reasons why they wouldn't do it. What happened recently that changed that?
What was really interesting was a speech by Eric Rosengren, who's a Federal Reserve governor and one of the voting members of the Federal Open Market Committee. And in his speech, he essentially made the case that it might be appropriate to be raising interest rates. He said that the economy is starting to show signs of overheating, and that the Fed should be thinking very seriously about their rate policy and whether rate increases are right now.
Have we seen any indication of that overheating that he referred to?
We have. So if we look at any time that you push rates really low, it tends to pull money out of savings and into spending. And that's what we've been seeing, especially in the construction industry. Multifamily construction is way up, and also the value of new construction is very high right now. We're also seeing it in the equity markets, where the Dow and the NASDAQ are at all-time highs, and there's fear that that the highs that we're seeing in these markets are not justifiable, and that we're setting up markets for that bubble to burst.
So what do you think we can expect then at the Fed meeting?
Well, like they say, when the Fed giveth, the Fed also taketh away. So the Monday after Governor Rosengren made his statement, Governor Bernard, who's also a member of the Federal Open Market Committee, gave a statement in which she said we should have prudence in deciding when and how to raise interest rates, essentially calling into question the policy that we should be raising rates. So as a result, the Dow Jones jumped by 239 points, and we're starting up the battle about who will win out and whether we'll raise rates or not. So the problem with this is that we've got a very open debate among Federal Reserve governors about when and how we should raise rates. And that very public debate is causing more volatility in the markets and is causing more uncertainty in markets. But the bottom line in the end is that we've got to start normalizing interest rates. The reason to have very low interest rates is to essentially provide a boost to a faltering economy that is in real trouble. We're not in that situation anymore. Our economy is improving, and the Fed has a responsibility to get rates back to their historic norms.
So it really is difficult to predict which way they'll go.
Yes.
All right, thanks, Robert. Thank you for joining us for this economic update. For more information and analysis, please visit zionsbank.com/economy.